Let's also chat with Chang Liu. He's a China economist at Capital Economics, and he's joining in on the phone line. Chang, good evening to you, and thank you so much for taking the time out. After years of breakneck expansion, it seems that the dragon is tiring out. But you know, when you saw the markets opening earlier today, they did lose some momentum, but it seems like they've taken it in their stride. Do you think the market is underestimating how bad the Chinese economy is doing? Is the worst yet to come?
Well, we do think that the economic slowdown in China will continue for a few more months. But I think in some ways, the GDP numbers released today is kind of old news. We've seen this economic slowdown over the data over the past few months, so we sort of knew that was coming. I think what supported markets today, equity markets, is hopes of new policy support. You know, over the past few days, we've seen pledges for further additional spending by the government, and today, one of the senior PBOC officials also came out and said that commercial banks need to actively increase support to the economy.
Okay, so are you saying to us that this is maybe just a rebalancing of the economy? And how do you see China trying to counter these growth jitters? Is the cooling, you think, fast enough to warrant, aggressive monetary and fiscal steps?
So the slowdown, actually, I think is more of a cyclical slowdown. It's mainly caused by policy tightening by policymakers over the last few years when they were focused on controlling debt risks in China. The structural problems are, they've perhaps improved slightly over the last few years, but we do think that policymakers are now stepping up support again, stepping up credit, increasing spending and investment. And, the result of that is that the structural problems will worsen again.
Chang, reflect a little bit on, how the trade war or trade skirmish, or whatever it is that you want to call it, with the United States is likely to impact China, in 2019. Should we not see some sort of a decisive solution, on the table?
Well, so all the reports from the talks so far have been relatively positive.
Mm-hmm.
I've seen a number of tweets from President Trump that are very, very positive, and he clearly wants to reach a deal. So I think what we've seen from China so far, the concessions or the offers they have made are unlikely to really appease or satisfy the hawks in the U.S. administration, including the U.S. Trade Representative. But, promises to buy a large amount of U.S. goods, along with some promises on intellectual property rights protection and increased market access, we think will probably be enough to get a deal with the U.S. And that will remove a headwind to the Chinese economy this year, though, that probably wasn't very big to begin with.
Chang, from your vantage point, how is this, sort of probable slowing of the Chinese economy likely to impact other Asian economies?
Well, it will obviously lead to slower demand for imports, or Chinese imports, so exports of other countries, particularly for commodity producers. It's also likely to weigh on company earnings with any companies that have business in China. However, the slowdown that we are predicting is not particularly sharp. I'd say it's about half a percentage point of growth. So it's not a hard landing in China. It is just a cyclical slowdown.
Right, Chang, thank you so much for taking the time out. Chang Liu there, walking us through what he's made of the dragon that seems to be, of course, tiring.